Green finance, sustainable finance has been around for ages, but since last year, this is a mainstream topic. This is suddenly on everybody's agenda. The transition to a low-carbon economy and sustainable finance, which is associated with it, has really become a mainstream topic over the last 12 to 18 months. After COP21 in December 2015, we're looking at about 100 trillion of investments into infrastructure over the next 15 years.
More than 1,500 signatories to initiatives like the United Nations Principles for Responsible Investment, and the money managers who've signed up to that manage in aggregate or have assets under management of more than 70 trillion US dollars.
I think it's very important to incorporate ESG factors, environment, social and governance into financial decisions because investors want this now. Companies have to move. If you are a primary investor with your equity holder, and then in the next round banks really care about your long-term sustainability of your business model and not just your 12-month performance, you will have to do it. We've seen a massive increase in the implementation of ESG criteria into the investment process. And why is that? That is really because the big institutional money behind it and the next generation of retail investors wants to have asset classes that are financially attractive but also responsible.
Governments are increasingly going to require that major players play their role. We're seeing the Financial Stability Board now setting up and will be requiring financial institutions to report on how they're dealing with this risk as part of assessment of their own financial stability. So the regulators clearly think that unless we get this right, we are financially at risk.
We see corporates looking at the space as a new source of funding, which diversifies their investor base. And again, with more competitive commercials, this is suddenly no longer a question of morals versus financials, but the two are suddenly aligned. Clearly, there is a need in China to put environment at the forefront after a few decades of extraordinary economic growth, but also a very, very strong policy commitment from the government and the People's Bank of China that essentially leaves no room for anyone in the economy not to participate.
The first major challenge that China has is that whilst it is figuring out how to green the economy, it needs to make this transition at the same time as its economy is slowing down. So that is actually the biggest challenge, how to direct enough resources into these high growth sectors. There's a technological revolution underway which is still taking shape. I believe that that is going to provide fresh impetus for the green finance market.
We will see governments and policymakers looking at this topic with a fresh mind, not just at the bond space, but also into green loans and how a bank can take traditional balance sheet commitments and make them green by issuing a loan that's potentially linked to an ESG rating, have incentives in the interest rate that evolve as a company improves their performance in ESG. If you believe in normal market forces, investors should move their money to the places that they believe have the better long-term view on sustainability. This will just be a trend that will be unstoppable.